Good morning, good morning. How we doing, guys? It is FOMC, the AM session. Super excited. You know, I say super excited most mornings, and to be honest, I mean it. I like sitting down. I like getting in front of the charts. I enjoy it. So, it's going to be a great day. We are eval only this morning. So I had some people say they wanted morning, some people say afternoon, some people said both. And I thought, well, I will just do eval only for the AM session. So that's what we're going to be trading. We will call this demo or eval only. Eval only. And that's a nice reaction we're seeing there. Let's see what that reaction's going. What's going on with that reaction? Let's see. Can we get that a little bit bigger? Boom. Make that obvious, huh? Huh? Yeah. Eval only. All right. So that's what we're going to be doing this morning. How's your guys' day going? How's everything going for you guys? Got the 5-minute here. We're going to go back and find our midnight open. These are going to be significant. Midnight opening price. And then we have that's really small. We'll call that our new day opening gap. And we'll call this the 18th. Been creeping up. Right now we're sitting in this 5-minute fair value gap. Let me jump to the 15-minute, see what we got here. I like the 15-minute, to be honest. The 15-minute fair value gap looks good. Oops. To be honest, we got a big range on the 5-minute and the 15-minute. I'm not sure exactly what I like, to be honest. Nothing looks like it stands out. We have a minor buy side right here. Right before this big drop, this minor buy side. See who wants to get that. I think really what I want to see right at open here, which is in 30 seconds, is the opening range gap. I want to see where we're sitting in regards to the opening range gap. I think that's going to be our best option for a trade this morning. And like I said, we're focusing on evals, and we're sitting at $50,056. So pretty much a fresh eval here. Our goal, my goal, would be, I don't think my goal is going to be to pass it because I think that's foolish. With potential poor price action today, I think my goal is going to be see if I can get 2 or 3 solid trades. I'll probably going either 3 to 5 contracts on the eval. We'll see how the first trade goes here. But let's mark our opening price. And then let's get our opening range first. And it looks like we started reaching for it right now. All right, so there's our opening range gap. I want to see it not fill right now, because that basically gives me no options as far as using this as a draw on liquidity. We're looking for our first fair value gap. We're not going to do anything till we get a first fair value gap here. We don't have one. I want to see where our first fair value gap is in relation to all the rest of this price action. Son of a gun. All right, we do have this nice breaker sitting right here. Now the question is, did we sweep liquidity down here? What we did is we ran this midnight open. We ran the midnight open and came back higher. So I'm okay with that. I like that. We did not sweep any liquidity down here, and we left the new day opening gap down there. Sweeping this high. I'm gonna have to be careful. I'm not a gigantic fan of this breaker, but it's something we should note. Because I mean, this is some nice structure. I like the way it looks. On a higher time frame, it's going to be balanced. It's going to be a balanced area. So you can see that there. It looks nice on the 5-minute too. We have this nice 5-minute fair value gap sitting right beneath it. So we could use that as a potential area where price may want to fill, especially if we're going to fill the rest of this this opening range gap, which as of right now, beautiful open. I mean, absolutely nothing going on here, just down and up. We did hit the midpoint of that opening range gap, which was something I did not want to have happen. You see the wick into the 930 price and the rejection. We should see lower prices. This is me learning to see how it reacts to 930. I'm gonna say we have lower prices from that wick. Let's see what happens here. We also have this nice small little breaker in here. A breaker here as well. I think we go lower. I don't want to take a trade off that. I think that's dumb as well. Especially with knowing the environment that we're in. If it gives me another, let's see, we got 12 seconds. If it gives me another wick, if the body can stay beneath this, the midpoint of this wick right here, and the midpoint of this wick, I may look at lower. I don't want it to go right now. I want to see it wick. Son of a gun. I wanted to see it wick up to here and reject. That's what I wanted to see. But as far as our analysis on it being the 930 price rejection, we were on point with that. Now the question is, can we learn to, is it possible to actually take it when we have a full-bodied green candle when we're hitting that 930 price? Could we go short with a full-bodied green candle? That's a great question. I don't know the answer to that. All right, so I'm not taking a long on that breaker. I do want to see this 5-minute reject right here on this 5-minute opening price. See what it does with that that price right there. Watching the midpoint of this wick right here, which is sitting right above the 5-minute fair value gap right there. I want to see how it reacts. Okay, nothing. So lower, midnight open. It was just hit. Let's see where the body closes. Does it close at the breaker or above or below? Okay, looks aggressive. Looks to be lower prices. Let's put our swing low down here. That's our swing low. Let's see if price wants to run that. Here's our new day opening gap that we just tapped. 918 new day opening gap. We literally tapped it to the tick. Body did fill this opening range gap completely on the 1 minute. I'm not completely convinced we're turning around right here, but there could be reason to. Here's our first fair value gap of the morning, right there. Let's see how we reject it, or if we run through it and find support in it. I don't think there's any reason for us to go higher, to be honest. The only reason to go higher would be to these equal highs, but I don't think we're hitting those until FOMC. So this is really us just reading price action without a potential draw on liquidity. Here's our swing low. It looks like it's gonna run. We got 2 minutes left on that 5-minute. All right, I'm going to take profit there. Not quite 10 handles. I'm not sure if we're going to hit that low or not. We got a 1 minute fair value gap sitting right here. And knowing the type of day we're in, we may not actually run through that. It is the last fair value gap of the range. Let's just take a note and let's see what happens here. So I took 3 handles on that trade for about 8 handles. Okay, it looks like we're running it. Gave me about $400. That was a $400 win about. And again, eval only this morning, folks. And I think, honestly, I forgot to do the ultra low. Son of a gun. I apologize, folks. I did not get the ultra low latency setting set up. Let me show you what I mean by that. It's quite annoying, quite frankly. I forget sometimes if I go under my stream settings, it has these grayed out toggles, and I didn't select this ultra low setting right here. And once I start the stream, I'm unable to actually select it later on. So I apologize, folks. We'll get that for the PM session that we're going to do later today. You know what's going to be funny is if this in the next 14 seconds gets all the way up to here, that would make this 5 minute respect this fair value gap right here. It doesn't look like it's going to happen. Let's see how aggressive this is. We have an inversion right here to a swing high. I'm not very confident in it, but something that we should note because we did just sweep a swing low. We do have this 15-minute here. Okay, I'm taking that to this swing high right here. I'm not looking to hold anything past it. Let's see if price can be aggressive and get to that swing high. This is the fair value gap that we've been watching. 30-second has closed, so we're good on the 30-second. We're good on the 1 minute. We could see a retracement here, but I'm expecting price to push up into this swing high. If I can get it, I'll take 2 instead of 3 there. And then we'll hold a runner and see if that runner will give us something. And we will bring a stop to break even so we doesn't go negative on us. I'm expecting to get stopped out now that we got that swing high. But if this does want to run and we close above here, we should run well above this. So I'll set the limit way at this high above the 930 price. But I'm expecting this to come back down here aggressively, at least to this level here. We have a breaker right here. Let's see if it wants to respect this breaker and move higher from that point, which nice reaction to that so far. It's looking like a beautiful trade here, guys. If we can hold it and see it run to this 930, this swing high, and then if we're this close, we're probably going to run these highs here. That's why I have it set at that high. Good morning, Ted. Sparhawk, my fault. It was my fault. I apologize. I literally sat down at 9:17 and I was trying to get everything ready and I just missed that piece. So I apologize. We are currently sitting in a trade. We took a TP already at this swing high. We got one contract left. We're going to let this run, see if it will want to run up here. I may be willing to move this stop a little lower. I don't want to. It's going to stop me out, and we'll get it back in down here if we need to. So there's the wick getting me to stop out there. The win on that was another $400 about for those two contracts. So I missed out on another $200. Dude, this sucks. That's gonna be annoying. Give me a wick me out, and then be aggressive. All right, that's fine. We can play off of this this 1 minute here. This was the main one anyway, and we're gonna get an order block in here off of a breaker. That will be even nicer, honestly. It was just nice to have a low entry. I preferred the lower entry just because it's lower risk. The lower you are in a range gives you more upside, a higher RR, and less risk. All right, let's see how it respects this midnight opening price, which is overlapping with this inversion fair value gap. This technically would be a model 2022 from ICT. And this wick right here was the entry. This wick was the entry for the model 2022. Let me show you. Where is that a wick? Okay, that's the wick. So it was an institutional order flow entry drill. It barely wicked in there. Do you see that? Right there. So let's see. I'm gonna wait. Instead of taking this, I'm gonna wait for the confirmation for a close above this fair value gap to see if it actually wants to push higher. I've just have experience with the model 2022 failing more than actually working for me. And this would be my confirmation that we run to the 930 or the swing highs. We also could stay in this range, so that's why this 930 swing high is a point of interest. Should we try along off of that model 2022? Why not? I do think we have higher prices, but let's see what happens. So the close of the stop loss would have to be here. And it's a big stop loss. It's 20 handles. So that will take all my profit that I made so far today, if it in fact goes against me. You could also take a close below this inversion fair value gap, or this fair value gap right here as your stop. You could take this a close below this level here as your stop loss as well, because if we close below it, there's a good probability we run for these lows. So let's just see what happens here. We're going based on a model 2022 with running these swing lows. I'm 50-50 on it. And be honest, I really don't want to lose all my profit, so I'm going to size down because I don't want to take all my profit, lose all my profit here if I'm wrong. So for those joining, we are eval only, folks. We're trying a model 2022, which is not my favorite model. And we're taking a long from it. We're in that long right here. We have our high, low, or our low, high, lower, low. We break higher, and then we come back down into a fair value gap inside of the low, high, lower, low, which is right here. So we are now in that model 2022. We're going to see if it wants to play out or not. Morning, Alkai. I mean, if this works, it's going to run these highs. It will be a great RR, but if it doesn't, it's going to suck. I like that we closed above this. That makes this an order block. So we just created an order block right here. Gonna get stopped out here, folks. There it is. All right, did it wipe me clean? Oh yeah, it wiped me clean. So do not give me none of that. Do not. Don't do that. You gotta be kidding me. Felipe, how you doing? Eval only, guys. I'm taking a revenge trade at the moment. Slightly revenge. Honestly, I really don't care. It's just the fact that we wick lower, grab the sell side, and we close green. That's bullish. That just pissed me off, though. Like, you're gonna take me out and then close green? Gotta be kidding me. All right, what I'm really wanting, I want to close above here. If we close above this, I may consider actually sizing, adding to my position. At this point, we want to mark this wick. We want to see the midpoint of this wick. We do not want to see price to come back down to that midpoint. Apex is Alkai, 100%. Use code DTJ to get the most updated discount, as well as it's the 80% off and $85 for your funded accounts to get your funded accounts. So it's half off for that. Instead of $160, it's $85. All right, so we just made equal highs. Good sign. That should be ran here. We should push higher from this point, at least above this. I'm not saying it's going to go all the way here, but 30 seconds, I want to see it close above this. And if we close above this, this is a breaker right here. I want to see how price reacts to that level if we can close above this fair value gap. So I don't like that reaction. Still, we made equal highs here. I want to see this. I'm okay if it closes red, to be honest. I would rather it close green. Meaning I'm seeing this as a potential order block again. And this is our order block down here on the 1 minute. Midnight opening price. For those of you just joining, I had a model 2022 entry down here, and it basically wicked me out, and I saw this green candle. It closed, so it ran lower and then closed green, so I immediately just got in again. Not as good of a position, to be honest, but this was very bullish, and I was kind of annoyed that it stopped me out. So we're gonna see what happens. We have equal highs here. You would not want to go short even if you had, because of these equal highs. We should run these equal highs. So I would like to see a close below this or above these equal highs. Let's just mark that. Those are the equal highs. I kind of want to size up right here and take it off at the equal highs. All right, I'm going to go with 6 contracts. As soon as we hit these highs, I'm taking 3 off. Let's see if we can get it. So I'm definitely over leveraged here. Definitely over leveraged. Looking at these equal highs as the draw on liquidity after we ran and found support on this inversion fair value gap again. That's the idea. But we are FOMC. In the AM session, price is going to be wonky. So looking at just a quick pop and on taking off the risk. I probably should have a stop loss down here, but I don't. All right, good move here. There's my hit. Oh, you gotta be kidding me. Fill that. Son of a gun. Why did I just drop that? Because we ran these equal highs, meaning it could run against me right now. That's why I had to pull that down. That was annoying. Do you guys if you don't know what I just did, I'm going to close that trade. When it wicked higher right here, when it wicked higher, it ran these equal highs. And it did not take my position. And then immediately retraced back down into the range. When it does that, you need to close any type of position you have quickly. Because this can be a reversal, or meaning it retracing back down into the range. I don't want to mess with that. I don't want to lose that kind of money. So right now I'm up $300. We were up what, 800? That's fine. I expected crap like this. Or price action. Honestly, the only thing we're waiting for right now is a close above this fair value gap. Why this one? It's the first of the day and the last in this range. If we get a close above this fair value gap, we should run up to this new week opening gap right here, which is also where these swing highs are at. If we don't do that, then I'm probably not taking a trade. It's 9 o'clock right now, or it's 10 o'clock here in 47 seconds. If we can close above this before we close, if we close above this right at 9 o'clock, I'll be interested in that. It's not going to give it to us. Are you going to give it to us? Nope, no close. But it still could run. That's the sucky part about a close like that. It's the highest closed body, but inside this fair value gap, it's 50-50. It could run this way, it could take off this way. I'm going to take a risk. I think we go this way. And this is totally immature. If we close below this green candle, I'll close the position. This is what I'm afraid it was going to do, is close in here and then potentially run. I don't like those wicks, man. I hate those. This is the point. This is the type of day we're in. Is expected just to go creep, 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 and not do anything for us. This could absolutely run against me. I'll close it if we go below this. You bet, Ted. That's a smart move. It really is. I'm just on here for you guys, to be honest. That's why I'm only on an eval only. Not doing anything personal or funded accounts. I know this wants to go up here. It's just, I'm afraid it's going to run against me here. I'm glad I closed that. Even in eval trading, I think, man, why am I doing what I'm doing? It's just better to be patient. It feels better. You feel more confident. It's the way to trade. Yeah, you can't oversize. You can't oversize. Do not oversize on these. Now this looks like a great trade. Let's look at the 30-second right here. Oh, shoot. I was looking for a fair value gap in here that we inversed, and we didn't. So no opportunity. But let's see if we close above this. This is what I said. I know we're going to go up here, but I was afraid we were going to do one of these numbers. And look what we hit. Midnight open. Okay. So nice reaction to midnight open. We swept these lows. Let's see if we can close here above it. You got to be kidding me. Yeah, Ted, this is not anything that is to get excited about. The only thing to get excited about is if we close above here. And I don't want it to close, way up here when we do. I want it to close right here. just trying to get to the 930 price. That's kind of what I want. See how much we're spending a lot of time in here. Either we reject it aggressively, or when we close above it, we're going to push aggressively. That's how I see it. We just don't know when that's going to be. I assume it's going to be in the next 10 minutes because we're inside the macro between 9:45 and 10:15. That's when I expect most decent moves to take place. Have you seen ICT Advanced Breaker video? Did he do that yesterday? Was that the one he talked about yesterday, Ted? I got in late and I haven't watched the morning part, the first part of the video. And he was just looking to take a trade, and when he was saying you shouldn't be trading today, I'm like, I know. So I turned everything off. Okay, so see how we respect it. See how we have not closed above this, and look at where we are as far as price goes. Ted, do me a favor. Would you, if you've watched that video, would you mind dropping it in here? I feel like I have, but for anybody else that would like to see it, and just so I can review it, if you have it in your history, if you don't mind dropping that. Oh, I don't know if you can drop a link in here. Let's see if I can, the settings on that community. You may not be able to. Maybe take off the www and the .com part, and then drop the in-betweens if it doesn't let you. All right, see where this body closes? It wicks lower and then closes green. This is an example of horrible price action, and we should see significantly improved price action after 2:30 today. After 2:30 New York Standard Time, we should have really smooth, really aggressive price action that should give us some nice setups. And this is why I'm not doing anything on my personal account or my funded accounts, because that is where the price action is going to be. We won't see price action like this. This is price action that shows up before the big moves, because it's just ticking time back and forth, tick, 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 just waiting for the news. So it will follow the same rules, but it's sloppy. And some of the trades that I took, I honestly shouldn't take. I don't take 2022 models, and I should have waited for the close above this fair value gap instead of trying to get in beforehand, especially on a day that's notorious for just being choppy and sloppy. So my account is reflective of that. And number three, can I say I just didn't care. I was okay just clicking the button, because I know that there's not going to be anything good, and it's kind of just fun clicking the button sometimes on an eval. So I'm just being honest with you guys. So right now, down $700. Good morning, Deborah. How are you? Okay, look at the reaction on midpoint here. Let's see if it wants to close below it or if it's just going to react from it. This is that big candle that I went long in. And I wouldn't be trading anyway, Deborah. This is not the time to trade. I'm really on here for everybody else here. For, let's see, probably another, I don't know. Not very long. I'm waiting for one thing. I'm waiting for this right here. I want it to close above, and when we close above, I'll probably take a long to these swing highs. So, Alwatic, tick, Alwatic. Hopefully I say that right. Alwatic. In regards to my funded futures in Apex, I have only done Apex. I personally really liked, you know what? I'm just going to see what the numbers are on for my funded futures here. So here's our reaction lower right here. Let's see if it wants to respect this 15-minute fair value gap or if we're going to run through it. So if I look at a comparable size, if I'm looking at a comparable size between Apex and funded futures here, and you guys correct me if I'm wrong on any of the details here. So these are the account rules. So for the my funded futures, we have a 50K account. Profit target is $3,000. That's the same as Apex. The max positions you can get is 4 contracts or 3 contracts. With Apex, you can get 4. Your daily loss limit is $1,200, and your max loss limit is 25. Trail down. That's exact. This is the exact same as Apex. That's the same as Apex. This is not a rule in Apex, so you could lose more than $1,200 in a trading session, and you could continue. This is probably a nice little feature. I like that. Activation fee, 0. Reset fee, $80. So for those of you that have used this, my question is their first account free? Is that what this means? Is their first account free, and then if you want to try again, it's $80? So it allows you to scale. It allows you for micro scaling and then a consistency rule. It does allow for Tradeovate and TradingView. I just don't know what the fees are. No max or min evaluation days. That's the same as Apex. Payouts as often as weekly. So instead of weekly, it's 10 days for Apex. Profits up to $10,000 is all yours. For Apex, it's $25,000. For no set day for payouts, meaning you just have to do 10 days or a week, and then you can get another payout. For Apex, I think they may have changed the rule, but you're able to do payouts between the 1st and 5th, and then the 15th and the 20th. Those are the only days you can do payouts. Your minimum amount you can get paid out is $1,000. On Apex, it's $500. It looks like it's every 14 days. For Apex, it's every 10 days you can do it. So Apex is better on that. My biggest question is, what is the cost? So does any of you know the cost specifically for a 50K account? That's what I want to know. Is what the 50K new starter account, try to log in. Yeah. Let's see. Does anybody have that? You did funded futures after the drama with Apex. You switched. Okay, thanks for explanation because I'm looking to switch to futures. Deborah, you paid $48 for your funded futures. But you don't have activation fee once you're funded. So you don't pay the $85 once you're funded. You pay, you pass that account and then you're funded after that, okay? Okay, so for Apex, it looks to be $33, and then your activation fee of $85. So you're looking at about $115 for Apex and $80 or for $48 for funded futures. Their rules are slightly different. As far as the drama goes, Deborah, I don't know if you're here yesterday, but I got paid out in 2 days. I got paid out in 2 days with Apex. I put a request in on Sunday evening and got paid out on Tuesday morning. I didn't have to do no video. I didn't have to do any of that. I haven't done anything, actually. So I think it's a preference at this point. I think it's more of a preference on which one you want to do. I use Apex. That's what I have used. I don't think there's anything against my funded futures. I wonder if, and Apex is by far one of the largest prop firms. So I can see why they get mostly the flack and all the new ones are the exciting ones. I don't know how old my funded futures is. I really have no idea. Let's see if it has a origination date on the bottom of there. Yeah, they started in 2023, 2024. They just started. That would be my only concern with new. I get that there's drama with Apex, but if everything is the same, and quite frankly, it is pretty close. My funded futures seems to be just a little less expensive, and it makes sense because they don't have the market share Apex does. But if I'm looking between, if everything is relatively the same, I want to go with the company that has a longer history personally, because we're in a space where things move so quickly and liquidity could literally disappear. So I don't think there's any problem with going with my funded futures. I think you just need to understand the potential risks on both sides, and then you decide what you want to do. For example, Deborah mentioned that she's like, with all the drama, she's like, I'm going to stay away from that because for her, it sounded too risky. And that's fine. But do not make a decision without understanding the pros and cons of both sides. And then just make the decision that you feel most comfortable with. There's not a wrong answer. Deborah, what do you think about the drama between ICT and Patrick? You know, to be honest, when it started, the first day ICT jumped back on Twitter. Where's my phone? I was literally like this, trying to refresh my screen. Is there anything new? At first, it was entertaining because, one, I was bored. I was sitting at home doing nothing. Kids were just messing around. And I'm like, ooh, what are they going to say? I really was hoping ICT was going to say something about the Robbins Cup and actually do something about it. I'm quite frankly annoyed. I really am. I really am annoyed with ICT, to be honest. I don't even care about. Yeah, Patrick's a hater, but he's honestly just playing on the fact. He's honestly calling out ICT in areas that other people do as well, but I want all of it to go away, and I want ICT to just win the Robbins Cup. That would solve all the problems. I mean, here's the thing. I cannot deny the fruit I've seen in my own life because of ICT's concepts. Hands down, no doubt in my mind. You couldn't convince me otherwise. You couldn't pay me to do anything else, period. Now, I'm just annoyed on the class, and I get the idea of marketing. I get it. I just can't do it. I feel like there's the Robbins Cup. The Robbins Cup is a competition between traders on who's the best in the world. That's what it is. And right now, the all-time leader is named Larry Williams, and he won in like 1986, 1987, 1980s, where he started with $10,000 and he increased his $10,000 lot to over $1 million in a year. Now, there were some things that happened that year. The market dropped. Look at that candle. Look at that candle. Look at that candle. That's pretty. Now, he mentions there were some unique things that happened in the market that time that probably helped him get those levels. That's great. Awesome. I don't care. Good for him. But ICT's mentioned multiple times that he could break it. And he's mentioned multiple times that he would do it multiple years but didn't. And so the speculation is, did he blow those accounts? Is he just doing it for the marketing? Do we actually believe that he can do it? I think he can. If he actually tried, maybe he can't. It's so hard when you see him do a trade that makes $100,000 in one pull. Now, people are going to say that's fake. It's not fake. It's not fake. It's not a live account. It was a paper account. But I can tell you it's not fake. And then you see his lifestyle. You see how many homes he owns, how many cars he has. He has the lifestyle behind. He has the assets behind it. Yes, I've seen. Yeah, oh yeah. I've seen him trade. And he has dozens and dozens of trades that he's recorded. And if you know anything about TradingView, you can't fake TradingView. They've done a great job with preventing frauds on TradingView. And then he always goes up to the top here. Where is it? There's a little green indicator that gives you live price action price. I think I don't even have it on mine. I bet you it's a setting. But he holds it up to show everybody that's live. I wonder if it's because I'm in a TradingView demo account. I don't know. But I've seen him do multiple trades. So, and I use the concepts myself. You see me teaching the same concepts, and you see how we read price, and dang, it works. I've seen price. I've called it. I've said it's going to turn here. I said now that it's done this, it should run here, and it does it. And it does it consistently. The only days that it doesn't do it are days like today. Today is prior to big news, FOMC at 2 o'clock. And what can you expect with FOMC is price action. We call it crap action. We'll call it crap action like this. Just large wicks, up and down, back and forth, not being aggressive to run to any specific level. Why? Because it's waiting. It's marking time. It's waiting for news to actually free itself from the consolidation to run to a specific level. That is why you see crappy price action. This is why it's so important for you, anybody watching, to know when is the major news events. There's 3 or 4. You got CPI, you got PPI, you got non-farm payroll, and you got FOMC. Those 4 events are the biggest news events every single month. And when you trade that morning of or the day before, it tends to be choppy. It tends to be not very good price action. That's just how it is. And if you go back and you look, you can't just look. This is really hard. You have to experience it. So on days where there's news coming up, watch what price looks like. Look how the candles form. That's something you cannot get when you go back and you look at previous days, previous news events. You don't get to see how the candle forms. And how the candle forms is so important. It is when you can see the candle form, like this candle right here, okay? This candle right here. When this candle at one point in time, within a 1 minute time frame, was completely black all the way down to here. And then it aggressively moved the other way and changed green. Now, yes, you see it here, and you can tell that this is true. At one point in time, anybody looking at post-price action can say, look, here is the candle. It had to be all black, all red at this point in time, but then it closed green. Anybody can say that. But the emotions you feel, how you see it take place, and then you see it run the other way is a completely different feeling, and it tells you something when you're seeing that happen. I literally took a long right here, and at a minimum, you can expect it to hit this high. That's exactly what happened. We hit that high. Now, I really admittedly wanted price to run all the way up to here. That's what I wanted to happen when I saw this candle, and I got in long, hoping that it was going to do that. Now, I was naive in my hope because it's prior to news, and I was on an eval account. I don't care. But you learn so much. Look at this. Look at this. This is intentional. This is intentional. Meaning we're running these highs, if not these highs. Do we have an opportunity here? Let's pause here for a second. let's pause on the ranty rant and let's see what we got. Look how we hit the 17th, the new day opening gap, and we closed above it. Now we just ran this swing high right here. We have a breaker, low, high, lower, low. And that breaker is right around the midnight open and the new day opening gap. I doubt it's going to give us an opportunity back down here. I think it's just going to continue to run and not give us any opportunity. Our only opportunity that's in front of us is this close, and I told you I was waiting for this to close above this level. Let's see if it doesn't. Look at the 15-minute chart. Look at the wicks. Look at where the bodies are. What are the bodies above? The bodies are above the midnight opening price. All the wicks reach lower and are not closing lower so far. Doesn't mean it won't, but it's a signature in price that as you see price action form, as you see these candles form, it gives you a language. Look at the reaction. We landed right on the midnight opening price. We are coming into this fair value gap. Let's see if it wants to wick down to this one here. We have a volume imbalance that's sitting down here. Okay, this is the low. You have a fair value gap down here too, but this is kind of what I'm looking at. Let's see if it wants what it wants to do here. If it's going to close above, do we want to respect the midnight open? Does the body close above it? Or, yeah, does it close above that price? Or how does it react? Now, this is reading price action. You can learn so much even on choppy days. But the best of the best of the best days to learn to read price action is to it's the same way they tell you they tell experts how to find out and find counterfeit cash. They study the actual real dollar, right? Okay, look at the close above midnight open. I kind of just want to take along to see what happens because it's right at the breaker. Let's see if it does this 15. I'm going to do a small long here. I'm going to go long there. But it's the same way that people study counterfeit cash. They study the real dollar. So if you want to see the best price, if you want to learn price action, you need to study the price action you actually want to trade in. This is not that. This is significantly more difficult to actually study and execute because what are you studying? You're studying price action that isn't favorable to you in the first place. It's not favorable. It's before news. So while even though I see this breaker right here, I see the midnight opening price, it may not actually give it to us. It may reach all the way down to this this volume imbalance because we're in seek and destroy conditions. We're running and just marking time. That's why I'm not in a funded account or my cash account, and I'm in an eval account I frankly don't care about. Now, I do care about it to some degree, but $30 is not a big deal to me. I'll pay $30 and get a new one. So, if you want to become a better trader, you need to read price action, live price action, not post action, and you want to do it on the days that have the most favorable outcomes. And we don't necessarily always know what that is, but we can reasonably guess that it's going to be days where after news events. Today we have one, FOMC at 2 o'clock. We wait for 30 minutes because that's when things kind of settle down. We wait for it, and then after 2:30, that's when we begin to look for our model, our setups, our liquidity, see what liquidity and where it's sitting, and we take action based on that. Here, the only action I'm taking is based on this breaker, the expectation that we had some displacement aggressively. I really want it to close above this fair value gap because if we do, we're probably running to 930 and we're running to these highs. I'm taking a chance because I've seen this before. When we see something like this, that's a great sign for price moving the other direction. And it may not, because why? Again, it's before FOMC, but we're trying it. And it's not that the models don't work. It's that we don't know which one is going to work. I could point out 10 other breakers, 10 other inversion gaps, and some of them worked, some of them failed. And when you got very choppy seek and destroy conditions, it's very hard to trade. So this is what we're watching, is this level right here. Now, what I covered was this fair value gap. Excuse me, I marked this fair value gap and this volume imbalance, and I grouped it together. When you have a volume imbalance, you want to include the fair value gap that's above it or beneath it, whichever one it is, because this is an inefficiency together. So price will fill that many times. If we can get above this price, I'm probably going to scale down one. Because I think it's going to continue to do this choppy chop. It's not what didn't give me the reaction that I wanted. But I think we'll probably wick into this level here, or at least come into it, hoping that it rejects and moves higher. But it may not. It may say, oh no, we want to come all the way down to here again. And if you notice, this breaker is pretty large. This is a large breaker. I wonder if it's at the midpoint of the body. All right, so it took one contract out for me. I got one left. I'm fine with that. Even if it runs and you're like, oh, well, it could have gone higher. Again, there's two different things we're talking about why I took that off. I took it off for risk preservation, for capital preservation. Yes, it could go in my favor and I wouldn't get as big of gains, but I can tell you that I won't lose as much either. So while, yes, you want profit, the more important thing to do is to preserve capital. Yes, it's an eval account. Yes, I haven't cared multiple times, but I'm using this as a teaching point. Based on what I'm seeing here, we should at least run this high. I would like it to run these highs. We took this trade off of a breaker, and we allowed for it to reach down into this fair value gap. That is what I was expecting, or not expecting, but that's what I was willing to allow. And I'm grateful that it reacted as planned and now moving in my direction. But this comes off the heels of this series of closed up candles here. This is what my indication was that we may see higher prices. And then we do all this choppiness right here to basically get people out of the trade. I'm still wanting a close above this. I want to close above this fair value gap because this fair value gap is significant. Why? Two reasons. Number one, it's the first one from the opening price. Price opened the New York session right here. 1, 2, 3, 4, 5. 5 minutes in, it gives us a fair value gap. From this point in time, we have not moved above this level all morning. We've tested this level 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 times, 23 times, and are on our 24th time. We should be closing above this, and when we do, my expectation is we run towards the 930 opening price, the new week opening gap, the swing high, sitting all in this area. If we don't close above this, I'm going to be annoyed. Frankly, I'm going to be annoyed because I took some longs here prior to it actually closing, expecting it to close above it, and it didn't. This is why you have to wait for the close. Wait for the close. You can't jump the gun. You jump the gun, it can hurt you. Yes, you can miss opportunities, but boy, oh boy, it could hurt you way, way more than it could help you. Yeah, yesterday, Deborah, was another one of the, usually the day before news and prior to news of the same day, it typically is not very good. Let's see where this close is. All right. All right, when I'm looking at this price action here, I do like how this candle made a higher high and that the body's closed higher, okay? I like that. You look at the series of candles, all the bodies closed higher. All the bodies closed higher than the previous high. This one didn't. This is normal when you come to a level of significance. It hesitates. It has resistance. It doesn't mean we're expecting a reversal. It means I'm expecting resistance, but I'm expecting us to get through it. And when we do get through it, I'm expecting an aggressive candle to run this direction up here. So we have a minor buy-side liquidity sending right there. When we hit this level, I do not want to see a wick and then a closed red candle or closed black candle. Look at this candle that made that high. See how we wick above this candle here and then we closed red and then look what happened. Okay, I don't want to see that. I'm okay if it closes red before I get to the high. That's normal. This is a fake short. I'll call that a fake short where price will run or start moving lower with the expectation that it's coming back up to it. Okay, but as soon as we hit this high, I want to see how we close. Honestly, I want to see it move aggressively towards these highs right here because it has shown so much resistance prior to that. They're expecting a lot of stops to be right here that it just needs to run and plow through them. That is what I want to see. So we closed higher. This is a great sign. I love that candle. I'm looking at the swing high right sitting above 930 right here. 930 opening price. We have this little bit of a wick, right? That wick candle right there. So that's why I have the 930 opening price. And then I have the new week opening gap sitting right here. So those are the levels that I'm looking at wanting price to run to. Could we have a retracement? Yes, we can. Now, I want to see the retracement respect this inversion fair value gap that we just closed above. I want to see price find resistance here. Maybe do one of these and start moving towards this level here. That is what I want to see. So it is allowable for it to come back down into here. Not long. I don't want it to be long. I don't want it to start chopping. If it starts going, if it becomes lethargic in here, I'm going to close the trade. Lethargic is not an ingredient for price getting for the algorithm getting a set of instructions running to a specific level. Look at this since we hit this down and we made these series of up close candles. Ever since this point, we have been extremely intentional, and I do not want it to stop here. If it stops here, my question is, was this the set of instructions? Was this the result of the set of instructions? It's hard for me to believe that. I'm thinking of this consolidation up here. That is what I'm looking towards. So I want this to be aggressive. Our first sign of aggression is a close above this candle right here in 43 seconds, which will turn this into an order block. That's a big sign. That's a big sign. Okay? When you see that, it tells us that prices may find support here and we could see higher prices. We don't want to see lower prices as much. We can still come down into here, but preferably, I want to see it close above here right now. If you guys are liking the commentary, you're liking this reading of price action, instead of the giant rants that sometimes ICT gives, hit the like button for me. I'd greatly appreciate it. It means a lot. These are completely free, same as ICT. But I hope you guys appreciate the commentary with a live trade right in front of us. In no way am I comparing myself to ICT or saying I'm better than ICT. No way would I be doing that. He's the man when it comes to price action, that is. All right, so see this? 34 seconds. Let's see where it closes. I want this to turn into a bullish order block. That's what that is right there, okay? Bullish order block. The other thing is we have this swing high, and an order block overlapping this swing high is really nice. I would like that. Let's see if it can give it to us. Now, the only other thing I can see happening is this, okay? Right now, we're spending a lot of time on the 1 minute. What if we jump to the 5 minute? What do we see? If we jump to the 5 minute, I see a candle that's closing in a minute and a half. And then in a minute and a half, what's going to form? A 5 minute fair value gap. Now, what could happen in a minute and a half? Once this candle closes, I could see an aggressive push lower into what? Into this 5 minute fair value gap, giving it energy to then continue higher. This is very common. This is very common. What you'll see is it could be pausing here, waiting for the higher time frame to catch up. Lower time frame takes time, waiting for higher time frame candles to catch up to agree with price. The other thing it could do is an institutional order flow entry drill. This level right here. This is right now a 5 minute order block, and price could come back down to this level, hitting the order block inside the 5 minute, sitting around the consequent encroachment of the fair value gap, and then push higher. That is something that could happen. And so when you're reading price action, you need to allow these things to take place when you're in a position. Now, it's much easier for me to hold this because it's an eval account. For my funded accounts, I would have been taking profits, been happy with 30 handles, and I would have been getting out of here because I have it copied on multiple accounts, and that would have been a $2,000, $3,000 day. I'm out of here. All right, so look, when did it drop? When did we see this drop, folks? This candle right here. This candle is 1050. It just formed the new 5-minute candle. It just formed it. So that to me is not a surprise. I'm watching it. How does it react to this level? Does it stay inside this 5-minute, or does it come down to the body of the order block as well, which is right there, which we came to the tick of that body? Do we find support or do we push through it? I'm hoping it finds support to move higher, right? We're allowing it to do this. If we get another candle, I already have it at break even, midnight open. I'll let it sit there. I want to see, I'm committed to this finding support and start to move higher. If we can do that, that's when I'll move my stop up to whatever the swing low is. And then we can also look at one of these swing lows right here and see if it actually wants to inverse one of these levels to move higher. Now, this is aggressive lower. Knowing that we had all of this here makes me look at this as just manipulation, trying to get people out of the long that it's planning on continuing. That's how I would see this. Yes, quick solutions. I'm going to be doing one this afternoon. I'm going way longer than I planned on. We got into this trade and we're reading price action. So it wicked right below, it landed on this order block on the 1 minute. Okay, that's fine. Let's see. Here we have the consequent encroachment of this wick. Does the body want to close below this level right here? If we don't, that's a good sign. If we do, I'll probably close the trade. This is probably my last line of defense. We also wick down into this fair value gap, which is the last fair value gap inside this range. So it is done its downward movement and could begin to move back the other direction. Whoops. If we go to the 2 minute, we have this fair value gap right here that I like. When it forms in 1 more minute. If we can inverse this 1 minute fair value gap, that's going to be a good sign. I'm watching the mean threshold, the consequent encroachment of this wick. If we close below it, I'll close my trade. Yeah, you can, Diane. The key difference, to give you context, the biggest difference with ICT is if you do not know your higher drawn liquidity, you will see something totally different. You have to have the correct draw on liquidity based on a higher time frame. I don't like this candle. I don't like how it wicked up into this level and then closed lower. We're going to probably close this. I'm going to close that. I'll close that at 10 handles. That's probably going to run lower. This candle here told me, hey, I'm not ready to go back up because I'm wicking into this fair value gap and I'm closing red, and then the next candle's aggressive lower. I think that was where my stop was. So a lot of price reading there. Great experience doing that for me. I really enjoyed this, to be honest. I did not expect us to get price action like this morning. I don't like the fact that if we just wick down here inside this last fair value gap and then start moving again, it's allowable. It doesn't surprise me on a day like today. We also literally look at this. This is the breaker that I had listed before. Remember the breaker that I called out earlier? And it wicked lower. I got long because of the breaker. We came back down and hit the breaker again. This is one thing I don't do that ICT does, is he would have left his stop in his original position. I moved my stop up to break even. I would have gotten stopped out here. But guess what it came back down to? It came back down to the breaker. Meaning we could see a reaction from here, and it's already a good reaction right here. This is an area in my trading I'm not very good at yet. I do not like leaving my stop loss. If my target's here, I don't like leaving my stop down here when I get a good move like this of 30 handles. I want to move that to break even to protect and make it a free trade and give me the courage to actually hold for a bigger move. That's something that happens when you know it's risk free. It doesn't hurt as much. Yeah, it sucks when you lose some of the profit, but if you get into the trade intentionally on learning to hold towards higher positions, which that's what this was. This was I'm getting in, I'm going to hold to these highs because I want to learn to hold my trades longer. Then when you move your stop to break even, it doesn't hurt as much because you didn't lose money on it. Yeah, you missed out on your unrealized gains, but you didn't lose your money. You didn't go negative. You could argue that point on an eval account because you do go negative. Your trailing drawdown decreases. So looks like we're going to stay in this range here, folks, for at least for the rest of the morning and early afternoon. I'm going to call it a day here. I will get back on somewhere around 2 o'clock. I don't know the exact time that I'll get on, but look for it if you guys want to join. Won't be taking a trade till after 2:30 for sure, p.m. New York Standard Time. We'll see what the price action looks like and see if it gives us a setup. And it's completely different than what I've been doing this morning. My goal in FOMC after 2:30 is to get a single trade. I just want one. I want one. I want one trade that gives me 30, 40 handles, and then I'm out of here. Because I don't want to overtrade. I don't want to lose what I've made. Multiple reasons why you should consider that as part of your trading strategy. But that's what this afternoon's going to look like. So it's going to be significantly less clicking the button. We won't be clicking the button as much as we did this morning. And that is real trading. This is what I did this morning. It is trading, but it's not. Real trading is being patient and waiting and waiting and waiting and waiting. So that's what this afternoon is going to look like. Would love for you to be here. If you hit the like button, if you like this commentary, if you appreciate it. Also, if you do use Apex or you want to try out or start a funded journey with Apex, use the code in the chat, DTJ, 80% off. $85 for activating your funded accounts and their lifetime accounts as well. I would greatly appreciate that. And other than that, thanks for being here, guys. I love chatting with you guys. We'll see you.